the stock price today?
Yeah, excitement, yes. In terms of value accretion, I'm not too sure in the immediate term because the IP story of HCL Tech has been playing out over the last 3 years or so when they started acquiring assets from IBM in 2016. So I think this is basically Mr. Shiv Nadar, the risk taker coming into play. I think if you look back in history, 10 years back, precisely in December of 2008, he actually bought Axon in a bid along with, he was in a bidding war with Infosys. That was to add enterprise application solutions business. HCL Tech was largely an engineering and an R&D services play and more an infrastructure services player. They added that, and we've seen HCL Tech kind of being an outlier in the sense investing such a lot of money in IP. With this acquisition, I think it would have probably invested close to $3 billion. But if I look at the return ratios that could potentially come through from these acquisitions, they're not too very high. My sense is probably it's a single digit or maybe even very low teen kind of a number. Versus if you look at the services business per se, the pre-tax ROIC is probably closer to 30, 40, 50%. So to that extent, I think this is a business which is in its nascency. It's margin accretive, but I think it's return dilutive. We need to see how this plays out. Some of these acquisitions that have been done in the past, I think we still don't have clarity whether they're actually adding value at this point in time. Yes, the growth has been fairly decent. Last quarter, IP part grew something like Mode 3 grew about 10% quarter on quarter. Margins are a little better than the company, 24-25% versus 19.5%, which is the margin that the company has got. So it's a little early to say whether it's adding value. Yes, excitement. Yes, there's going to be a lot of excitement today on the stock.
The point I want to bring out for everyone is that we've been talking about Nifty, we've been talking about crude, we've been talking about what's happening to the rupee. But the problem, I think, is the breadth. The breadth is completely dented. Just look at the market breadth. And the market breadth yesterday, which is 6th of December, is reminding you of what typically happens when there is a macro scare or when markets are in a panic mode. Now, there is no large HNI built up. There is no large selling from domestic institutional investors. Foreign institutional investors are not selling some of the mid and the small cap stocks down. But the kind of crack what we've seen in the market breadth in last 2 days, and especially yesterday, it just puzzles you that what is making markets so nervous. This is not Jan or Feb 2018 where the positioning of HNI and small investors was very large and that led to a sharpish margin recovery. This is not September and October 2018 where the market reversed very, very sharply because there was FI selling and which had a snowball effect on mid and small cap stocks. Mid and small cap stocks have corrected 15, 20, 40, even 50% in some cases. A lot of froth is already out. The weak hands have already got shaken. The so-called weak fruits have been plucked out already, and yet the breadth has completely collapsed or completely caved in. Girish, what is making the broader market so nervous?
Well, I think markets are nervous largely because of global factors. I think the domestic factors have actually turned positive. If you look at crude, that's come down from 75 to sub 60. INR has started to behave well. We've had 10-year yields come off from something like 8.2 to sub 7.5. So I think the domestic factors have been kind of playing out fairly well in the last, I would say, 10 days or so. The issue is to do with, I think, global situation. Global growth is a big, I would say, a factor. I think the issue is that last 10 years we've had very strong monetary stimulus from the Fed, ECB, Bank of Japan. And it's gone on for a very long period of time. And you just do not know where the bubbles have kind of got built up, which will probably burst somewhere down the road. They typically do. You really don't know which asset class it's going to hit. You only know in hindsight. So I think what the market is a little worried about right now is what is going to be the collateral damage of those bubbles bursting on Indian markets, be it from FI pulling back money from India, be it to do with earnings cuts that may probably come through for some of these companies going forward. So I think that is what the market, in my opinion, is worried about right now. Not so much to do with politics. I don't think the domestic macro situation has been fairly decent right now. I would attribute it completely to global factors.
Okay. Sandeep, wanted to get your thoughts in on Sun Pharma. The fact that there is, that sources are telling us that the Halol observation is over and there have been minuscule observations really coming in, or rather no adverse observations which have been issued to the Halol facility. Do you think this positive news could mitigate the losses and deep damage that the insider trading probe has done on the stock in the past?
Yeah, so I think this insider probe is pretty historical, and to that extent, I'm not very sure how that will actually impact the company fundamentally. But I think there are more issues about corporate governance, the fact that the promoters have been putting money in businesses which are actually going down, like Suzlon, some other investments, etc. And to that extent, we don't really know what's happening and what's their thought process. The other part is that they've been guiding something and reporting something else, and I think so I would think a trading bounce could happen, but no sustainable move.
Well, we've hit the pre-open rates, and it's a marginal trick in the green as we speak. You have the Nifty and the Sensex showing a bit of a gap up. I don't know how much of that would translate into the real open, but we'll have to wait and watch out whether that sort of move is mirrored by the actual open at 9:15 as well. You're keeping an eye out on crude, and you would also keep a close eye on what's happening with the money market, especially the move on the currency side. Will come up perhaps in a bit. It's opened at 70.58, stable for the rupee as well. And that's of course a quick view on the bond yields. Girish, as a house, what are the top 2-3 names that you're recommending right now to clients amidst this volatility, especially from the mid caps?
Okay, so my sense is that the markets are going to be fairly volatile with a downward bias over the next year or two, largely to do with global factors and not to do so much with domestic factors. And the key thought process the investors should have is value protection, protection of capital in one sense. So to that extent, we are more leaning towards consumer-oriented companies. Within the mid-cap space, we like certain consumer durable stories like Whirlpool, IFB Industries. These are consumer electrical / consumer durable stocks. We like consumer discretionary plays, which are your PVR, Inox kind of a situation, which are trading. And I think from a consumer discretionary standpoint, I would probably think these are a slightly cheaper place. Within the, I would say the financial space, I would probably think that one should be very selective in picking up banks which have seen multiple cycles. So a City Union Bank, which is probably a 100-year-old bank, which has delivered you 1.5% plus ROA over multiple cycles, I would think is a decent bet to take right now. So I would say those are the kind of areas. Selective autos. I wouldn't call iShares a mid-cap company, but some of those are the ones which would probably stand out for us over the next 2 to 3 year time frame. See, we have to look at companies where we will not see a great deal of earnings crunch over this 2 to 3 year time frame. And while there could potentially be a PE multiple contraction, after this turbulent phase, the same PE multiples will probably come back up. I would think a good play could be a consumer staple play, where you could potentially see a big crunching of PE multiples into the next 2 to 3 year time frame, but the same multiples can come back up after this turbulence. So that's the kind of set of companies that we would want to invest in.
Is iShares your big hope trade right now? I mean, what makes you so confident that the earnings will come back? There's no denying that, yeah, valuations are looking pretty cheap right now, but what makes you so confident that growth will come back for RE? So,
I think growth has come down pretty substantially. Yeah. Market has kind of repriced its expectations on growth for RE over the last many quarters and months now. And that's reflected in the PE multiples that's trading at. We believe that RE can potentially deliver low teens kind of volume growth over the next 2 to 3 year time frame. because we think that it's got the ingredients to do that, in the sense that if you look at the installed base of two-wheelers in India, that's probably 80 to 100 million two-wheelers, and there is an aspirational element to that, in the sense that people want to move to the cruiser bike category. So it's selling about 950,000 bikes a year. We think that that's a fairly small market share within the overall two-wheeler space. And the other thing, what we believe as Indians become slightly more richer, is that they will potentially move towards a cruiser bike situation. So if you look at states like Punjab, Kerala, or Goa, which are slightly more prosperous states, 1 in 3 bikes sold are Aisha bikes, RE bikes. So as the incomes go up, we believe that there's going to be a migration there. We believe that there is going to be the aspirational element to this 100-odd million bike install base, so to speak, right now, who will potentially move up. So broadly, these are the elements which make us believe that you'll probably see a low teen kind of volume growth, which should be among the best in the industry, in our opinion.
Okay, let's zoom out a bit from talking micros to addressing the overarching theme that's influencing the markets currently. Chris Wood's Greed and Fear is out, and Pankaj joins in after having scanned through the report to take us through the salient features. Pankaj?
Right, two things which markets would watch out for. Firstly, his view as far as the trade war is concerned, or the trade truce that has been going on now. He says that the Greed and Fear remains confident. This has been their earlier case, that a deal would be strike. China would be more than happy to buy more American goods, and they believe that in the next 3 to 4 months you will have a deal which should calm down the market. If not, it could be very, very negative as far as US stock markets are concerned. Even Chinese economic growth could be hurt. So that could be a big event, but they are hopeful that the trade deal will go through. The second is as far as their Asia portfolio is concerned. Now they have removed both the India Bulls stock, not citing any particular reason, whether it's India Bulls Venture or India Bulls Housing. At the same time, they've added a couple of other Asian stocks, but 1% increase on Bajaj Finance. So their portfolio earlier had India Bulls Housing as well as India Bulls Ventures as far as their list is concerned, but that is something which they don't have. And now you can see the list on your screen, whether it's a light of ICICI Bank, IndusInd Bank, Bajaj Finance, Groove Finance, Godrej Properties are some of the names that they like. HDFC Limited and HDFC Bank are also a part of this list.
Okay, let's just quickly recap some of the stocks that you need to keep on your radar this Friday. And Sun Pharma, US FDA sources indicate to us that US FDA has completed hallowed unit inspection. There has been no adverse observation issued to the unit. Also, Cadila Zydus, and it seems like there is a fundraising in the pipeline. Zydus has approved fundraising proposals. They've approved raising debt via NCDs at about 1,500 crore rupees. HCL Technologies, we've been telling you this one. It's the biggest deal. They've decided to buy select IBM software products for a sum total of $1.8 billion. The management told us when we chatted with them earlier today that the deal is expected to close by about mid-2019. Also, Kotak Mahindra, the management has clarified they're denying completely that Kotak Mahindra Bank is looking at acquiring Yes Bank. They're saying this is just baseless rumors. Also, Majesco is in focus. The US unit has filed for a rights offering. They're going to invest about $35 billion in the rights issue.
Okay, those are some stocks which would, attract a lot of traders and investors' attention in today's trading session. Let's talk about two stocks from futures and options segment, and both large cap names today. One negative and one positive observation. Maruti adding a lot of short positions. Last two trading session, it has corrected substantially in yesterday's trading session. 5% rise in YoY with fall in price. Needless to mention that these are short positions. Now, interestingly, the entire rise in Maruti from lower levels was because of short covering, or one can safely say there was no major formation of long position. And now you are seeing, formation of short position when stock is correcting, which means stock is showing weakness and it's a weak stock. Also, the entire correction which took place in Maruti before the main trend, the current bounce back which happened, it took retracement around 38% of the bigger fall, which comes to the level of 7,800, which is the immediate resistance for Maruti and a strong resistance for Maruti. So a weak stock and hence negative observation. The other stock is ONGC. Now this is interesting. We are seeing a lot of shorting taking place in PSU names, and ONGC is no different. 8% rise in OI with fall in price. Then why the observations are positive? Because in last 9 sessions the open interest has doubled. So there are too many short positions in ONGC. Case in point, yesterday if you see, it corrected 2.5%, there was 8% rise in open interest, but look at cash volumes. Cash volumes are very less. And in past, that is in 2016, we have seen that this 135, 138 zone has acted as a strong support, has acted as a level of reversal. So watch out for ONGC, the observations are positive. Coming to the index trade, market participants have been, a bit wary of giving trades in index because it's so choppy, but Kunal is suggesting to buy Nifty with a target of 10,780 and stop loss of 10,600.
Okay, counting down, just about 6 minutes to go before we hit the real rates. I quickly want to mark once again, the moves in yesterday's session, especially on the downside. And Yes Bank continues continues to see pressure. Adjusting lower, 3%, 168 coming on Yes Bank in yesterday's session. Among the banking names, Girish, is your pecking order still the same? Be with the safer bets and don't venture out?
Yeah, I think being with the retail private financial banks would be probably the best strategy to go by right now. So your HDFC Bank, your IndusInd would be our top picks out there. Obviously, there's been a lot of poison taken out of the system as far as the private corporate banks are concerned, be it ICICI Bank or Axis Bank. I would think that those are also looking fairly good bets if you look at the next 1 to 2 year time frame, because we've not actually seen any kind of meaningful corporate lending being done. So to that extent, even if you do go into a downturn, a slowdown, economic slowdown driven by global macro factors into the next couple of years, I don't think these companies are going to be impacted meaningfully. So I would think that private corporate banks as well as private retail banks to us represent fairly good bets. I would think there is more value in corporate banks right now. I'm talking about ICICI Bank specifically.
CK, coming on some of the Tata group of names, suddenly with the exception of TCS and Titan, all the Tata group of stocks are caving in. Tata Steel is down from 700 to 500. Tata Motors, it's on a different, that's a completely different kettle of fish. Tata Global from 300 to 200. What was a great year? 2017 was a great year for Tata group of companies. The same time last year they were flying and now they're crash landing.
Very true, Nikunj, and I don't think there is a single reason that one can attribute, across the board to multiple sector related stocks. So it just seems that perhaps the little bit of halo around the Tata name has got slightly jaded for whatever reason. Now I think each of these stocks has individual specific elements attached to it which could be ascribed to the decline. But it seems to be more of a market thing where stocks which had risen up quite considerably during 2017 all met with considerable amount of shorting or selling or profit taking, and when those three are in progress, they sort of kind of take on a domino of their own, and when some news elements are mixed into the whole situation, I think that decline just exacerbates.
2 minutes to go. I want to go back to that point which I flagged off, which was there on my radar, that the breadth has caved in. Historically, when we've had such a large dent in the market cap, it is always because of a reason. Either it's liquidity, global technical factors, lot of selling, or some macro scare, or some event risk. Local factors are not bad. If at all the needle has turned in the positive zone for Indian macros and for earnings. But the breadth, I think, is an indication that the desire to buy and participate into small and mid-cap stocks even after the recent decline is absolutely zero. A lot of investors are also suffering with what could be called as a recency bias, which is that in the recent past, because small cap and mid-cap stocks have done badly, nobody wants to buy them. The allocation of a lot of funds also after the alignment of the portfolios have changed. So in general, the appetite to buy mid caps in general and small caps as a category, I think has got diminished. Earlier, or same time last year, there was a mad rush. There was this Piper effect. Everybody wanted to buy some of the mid and small cap stocks. They were flying high. Everyone was chasing them. Now the same story has reversed. I think the differentiation will soon start settling. Same time last year, 99% of the mid and small cap stocks were going higher. Now I guess that number will settle down to 15 or 20%. That's typically how markets move. But as we walk into trade this morning, I would say globally, we've seen a big bout of volatility for US markets. They were down by about 600-700 points and then they reversed very, very smartly, almost closed in the green. So markets are volatile. I'm not using a new terminology, but that's what the new reality is. Central banks are changing policy action. We must recognize that, and that is going to be coming at a cost, and the cost is called as volatility. There's a difference in volatility and risk. I often say that, but for the moment let's focus on the pre-open rates. HCL Tech would be the big one because they've acquired a big company. I mean, they've acquired some big assets, $1.8 billion. $1.8 billion. Let's see how markets reacts there. And then later in the day or later in the evening, we'll get the outcome of the exit polls, which way India is likely to vote, at least in the assembly elections. First rates Friday morning, 45 points higher for the Nifty. We are outperforming global markets very, very smartly. Yes Bank is bouncing back. I want to mark HCL Tech. How are markets exactly reacting to that large fat acquisition? And for the moment, the jury is out. It's a cut of about 3%. I think the stock should settle down, but for the moment it's down. Metals selectively are bouncing back, so Vedanta is up, Tata Steel is down, and I quickly want to mark Sun Pharma because Sun Pharma has seen a market cap erosion of nearly $2 billion, little less than $2 billion in last 2 days because of those concerns which have been raised on insider trading.
Yeah, indeed. So Sun Pharma sees some relief, although I would say that this is not exaggerated really. HCL Technology is definitely seeing the reaction. PFC REC, what are they up to now that the cabinet is cleared? The PFC takeover of REC. The deal is going to fetch the government around 14,000 crore rupees to the exchequer. And this is much on expected lines. We at ET Now had already reported this one. PFC down by about 3%. That too is on expected lines. Zydus Wellness and Cadila. Zydus Wellness is going to raise funds to buy a share sale to investors. They're going to sell about 2,574 crore rupees worth of shares to Cadila, True North and Pioneer Investment. Also raised debt via NCDs of up to about 1,500 crore rupees. So these two stocks as well in focus. IOB has got the SEBI nod to issue about 244.5 million shares to their staff to meet the MPS rules. So look out for this one as well. This starts off on a positive note. I want to see what the beaten down names from yesterday are up to. And Maruti cracked quite hard. Almost a 5% slice is what you saw in Maruti. Today it's seeing that bit of rebound play out. What is Indiabulls Housing doing, considering this one also has been crashing quite a fair bit? And Bajaj Finance as well had a rough day yesterday, as did Tech M and Tata Motors. So many of the Tata Group names were really getting slapped hard. Today too, Tech Mahindra is down. Tata Motors should come up for you on your screens next. That's still down by about almost 1%. 160 is what it's just about defending. On the way up were some of the intriguing names: Sun TV, PTC, Siemens, JP Associates and Sun Pharma. These were some of the names which held out. But again, today you can't really draw out a big trend. We have not even gapped up as much as the SGX Nifty was defending. I think the big sigh of relief is that the breadth has opened positive. But again, it's a question of how long this is going to last.
That indeed is the case. Very quickly, some of the mid-cap movers. You're seeing attraction in Manappuram Finance, Muthoot Finance, both up 3%. Jet Airways is trading higher or has opened higher. Infibeam, then the likes of Avanti Feeds seeing traction. Inox Leisure about 2%. V-Mart, Indigo, VIP Industries are some of the key gainers as we speak. Among losers, notable names, even though the declines are few and far between, or at least the advance decline ratio is more skewed towards advances. You have PFC, which is down 3.5%, so that doesn't change. Magma FinCorp, there's Mindtree, there's Brigade Enterprises, L&T Infotech. Some of the mid-tier IT names are under pressure.
Yesterday Muthoot Finance was very volatile. It was down by 12-13% at one point of time, and there was a sharp rebound in FAG, end of the market. And stock closed down by 6% because of the post-closing adjustment. Started well today. We are seeing Manappuram Finance also doing well, 3% up. Jet Airways is up, Indigo is up, IOC is up, and so is Hindustan Petroleum and BPCL. So OMCs and aviation, yesterday also crude oil prices were, below, and today too they are down. But today, these stocks are reacting on a positive note. We are seeing some of the pharma names also doing well. Glenmark is up by 1.8%. Ashok Leyland is making a decent bounce, up by 1% or so. So, a lot of beaten down names are doing well in today's trading session. I also want to highlight Diwan Housing Finance has started on a decent note, up by 1.5%, around 208 levels mark. SCL Tech down by 4%. Mid cap IT is down. Tata Motors continue to bleed, and even large cap IT names are showing some correction. Tech Mahindra, TCS are down. CK, we were talking in the opening remark that how we were not able to see that positive SGX Nifty Qs and data are not matching up, and we might see probably this gain not holding, and we are seeing after 45 points gap up, there is no follow-up buying.
Well, I wouldn't think that is too surprising for today, Siddharth. Much of the longs are liquidated. B, it's a weekend. C, there is exit poll likely to come out today, and D, I think there is no real corporate flow in terms of news which can buoy up the sentiment. So collectively all this results in one thing, which is absence of fresh buying, and if fresh buying does not appear, then stocks cannot show follow through price action. I think that is what I would say as the first reason for the kind of lack of response to SGX. Now, taking that further, will we see it this thing emerge during the day? Even there I would have my doubts. Now, the other flip side is, will we have some selling coming through? Even that I would doubt, because a lot of positions have indeed been liquidated, as I said earlier, and there may not be too much left to throw away today. So it would be some intraday shorting coupled with some fishing for the bottom, which could be pretty desultory. So I'm not really expecting an active day today. It might maintain a slight bearish bias, if any.
Ajay Srivastav joins us. Ajay, good morning. Thank you for joining us. I don't have a coin to toss, but I guess that's how you'll have to do to get a market view in the short term.
Well, the market in the short term is certainly negative. I think there are no triggers. You've seen the earning downgrade have come through. You've seen the GDP forecast has been downgraded. The global market is in volatility, has not gone down. So I don't see any positive trigger coming up. And even if the election throws surprise in terms of a ruling party winning, I doubt very much this market will react. I think this market needs some really fundamental triggers domestically, and of course things to settle down globally. I think that's where the problem lies. Globally we are in volatility, domestically we are going down in terms of GDP. So nothing good so far. I think it's good time to call an early Christmas. By 15th December, do not invest anymore and go home and use the money productively in holidays.
Ajay, you're amidst all the action in New Delhi. Tell us what's the buzz and exit polls, and how critical would they be for the market?
See, okay, the buzz and exit poll, whatever, Delhi is same as Bombay. In fact, Bombay has more betting than Delhi, by the way. So, but I think the buzz is same as everywhere, that I think that it'll be a kind of a decent kind of losses in terms of seats, voting share. Now, whether it transforms into government changing, we don't know the answer to that one. But by and large, they believe that at least 2 states will go the other way in Delhi. Will it affect the market? I doubt it very much. That's why I said I think we have got too many other, non-political factors to affect our market than just the election of the assembly. I think those are all factored in, that definitely we know ruling party will get lesser number of votes, lesser number of seats, may lose a government or 2, but that doesn't change the dynamics of the market. Our economy has a serious problem. Globally, we're seeing the trade war hurting everybody in the market, and more importantly, after a long time, fixed income has become such an attractive option. At 8 to 10% or 12% money that you can get a fixed income return, you are doing pretty well compared to equity markets. So the allocation itself is an issue today for investors who are saying let's keep in fixed income for time being and see how it rolls.
Okay, fair enough. But how are you, next week is going to be a really heavy event risk week, so to speak. You have the Brexit vote coming in on the 11th of December, and we've seen how it's impacted Europe. There's all that talk about what the Fed would signal for 2019 in terms of the rate trajectory there. And then, India would contest with the outcome of the election, the state election results. Are we bracing ourselves for a volatile close to 2018?
I doubt it. I think what we have gone through in the last few months has been a flushing